Whether you're a new business owner or just starting out as an LLC owner, understanding your tax obligations and how to run your LLC is mission critical. That is why in this video, I am going to give you the ultimate guide on what you need to know about running an LLC and how you should be operating to be tax effective. But before we jump in, I'm gonna need you to like, comment, and subscribe so you don't miss out on any of this wealth building information. Now, let's get after it. An LLC is a pass-through entity. And when people say pass-through entity, I want to make sure you understand what that means. A pass-through entity means that the actual profit or loss at the end of the year is going to ultimately appear on your personal income tax return. It passes through to the individual members of the LLC. A lot of people don't understand what pass-through means. So wanted to make sure that you guys understand that. If you are filing as a single member LLC, that actual Schedule C is going to be inside your individual tax return. Therefore, it is going to automatically show up on the member's tax return. As an LLC owner, you have different filing requirements depending on whether you are filing as a single member LLC, you're the only person that's a member of your LLC, or whether you are a multi-member LLC with multiple members inside of your LLC. If you are a single member LLC, you're going to file a Schedule C inside of your individual tax return, which is basically a sole proprietor form, so that you can report all of your income, all of your expenses to come down to your net profit or loss. If you are a multi-member LLC, you're going to file a Form 1065 with IRS, and each one of your members is going to be issued a separate K-1 form, kind of like a W-2 form, that you're going to utilize to report on their individual tax returns. It's important to note that if you are a multi-member LLC, your tax return is due March 15th, not April 15th, a whole month ahead of the individual filing requirement. Therefore, your LLC return needs to be done first so that individuals who need to prepare their taxes that are members of a multi-member LLC can have their K-1 forms to prepare their individual tax forms. A lot of you don't realize that you are in this LLC that is going to issue you a K-1 form. I can tell you so many stories where clients come to me after they file their income taxes saying, oops, Karla, I got a K-1 form, now what? Now we got to amend your personal income taxes, unwind, so we can include that form. So make sure you understand your appropriate filing requirement. LLC members should be maximizing deductions. When you are an LLC, part of the reason why you created this LLC, because you really wanted liability protection and to really legitimize your business. But you are now a business owner. So as a business owner, you want to make sure that you have separate business accounts, separate credit cards, so you can maximize your deductions, making sure you take all deductions that are associated with your business as a write-off, even those various deductions that you may not think about, such as a car that's in your individual name, such as a home office that you're using to run your LLC, such as that computer you purchased before you even thought about starting an LLC. What about having your internet line at home being a deduction for your LLC? Are you using it for business? I would imagine you are. So make sure you're maximizing those deductions. And do not think for 1 second that you can't take your deductions if you don't have income. That is not what the law says. The law says that if you are in the pursuit of income, that you can take all deductions associated with trying to make that income. So make sure you understand that. And that's code section 162A for your reference. Write that down. As an LLC owner, you can take advantage of the QBI deduction. That's the qualified business income deduction. And that is where you are allowed a maximum of 20% of your net profit to be a deduction. Allow me to give you an example. Let's say that your business makes a net profit of $40,000. 20% of that is $8,000. So now you're going to get a deduction of $8,000 to lower your overall income. That is why it's so great when you are operating as a business, when you're operating as a flow-through entity, and you can take advantage of the QBI deduction. What's really important is to make sure you understand the requirements to get the QBI deduction. Do you need to have payroll? Do you need to have assets? How do you have your business classified? These are all keys as to whether or not you're going to get the maximum 20% or maybe only get 5%. Make sure you check that out so you can maximize the QBI deduction. As an LLC owner, when you have net profit, you qualify for a retirement deduction because your income from an LLC is considered earned income. And when you have earned income, you can set aside money for retirement. You can do a traditional IRA. You can do a Roth IRA. You can set yourself up a solo 401k, or you can set yourself up a SEP IRA. Either way, realize that is a deduction that you can take and set aside some money for yourself. You don't have to max it out. You don't have to do the full IRA contribution. You can do $100, $1,000. But remember, it adds up over time. And the younger you are when you're starting, the better you're going to be in the long run because you have nothing but time on your side. So make sure you take advantage of the retirement savings deduction. LLC owners should be taking advantage of the home office deduction. If you are working out of your home, if you have a location outside of your home, but you use your home office for administrative purposes, you can take the home office deduction. Don't think just because I have a day job, just because I have a 9-to-5, I can't take the home office deduction. You absolutely can. And I want you to know, my friends, that when you are thinking about the home office deduction, if your business is at a loss, don't let your tax person tell you that you can't benefit from the home office deduction. You want to calculate it. You may not deduct it this year, but it will roll forward to a year when you have profit. So you want to maximize your deductions while you have them. That is going to be mission critical for you. Take advantage of every deduction that is on the table. Health insurance deduction as an LLC owner is also important. If you are working full-time in your LLC and you have health insurance, you can take a deduction against your income and get the health insurance deduction, which will help lower your overall taxes. Now realize you can still have a full-time job. You can be working your LLC part-time. You can still take the health insurance deduction if you're not covered by health insurance through an employer. So make certain that you take advantage of all of these things and realize that may also help you cover your health insurance premium, knowing you're gonna get a tax deduction for it. Being an LLC owner requires you to understand not only filing requirements, the time of year you have to file, knowing that you may need to pay estimated taxes is also extremely important. It's important to understand this because you don't want to get yourself to a point where you're making great profit, but you have no wherewithal on how to lower your tax bill. You have no wherewithal on how to pay your estimated taxes. You have no wherewithal on how to save for retirement. It's great being a business owner, but it's even better when you can be a business owner with a lower tax bill with money set aside for retirement. Now that you know better, I need you to do better. I need you to share this video. I need you to like, comment, and subscribe, because we are not missing out on any more wealth building information.